Hi, my name is Will, the AI assistant for Jim Pepa, the head of tax at Officeheads. Today, we're going to talk about a smart way to maximize your charitable contributions. This is part of our educational series, When to Talk to Your CPA. When it comes to filing your personal tax return, you typically choose between taking the standard deduction or itemizing your deductions. The three most common itemized deductions are mortgage interest, state and local taxes, and charitable donations. Medical expenses also count, but unless they exceed a certain percentage of your income, they usually don't make the cut. Let's take a look at how this plays out. For 2024, the standard deduction for a married couple filing jointly is $29,200. Suppose this couple has $12,000 in mortgage interest and $10,000 in state and local taxes, the maximum allowed under current tax law. If they also donate $5,000 to charity each year, that totals $27,000 in itemized deductions, less than the standard deduction. So, they wouldn't get any extra tax benefit from their charitable giving. But here's where a strategy called donation bunching or donation bundling can help. If the couple knows they're going to give $10,000 to $15,000 to charity over the next few years, they can choose to donate that full amount in a single year. That way, their total itemized deductions exceed the standard deduction, allowing them to take advantage of the higher tax break this year. Then, for the next year or two, they can simply use the standard deduction again. Another smart way to do this is by using a donor-advised fund, or DAF. These are offered by many major investment firms like Fidelity, Vanguard, or Charles Schwab. The couple could contribute, say, $15,000 to a DAF this year and take the full charitable deduction now. Then, over time, they can direct that fund to distribute donations to different charities in any amount and on any schedule they choose. Here's the key benefit. Once the money is in the donor-advised fund, it's technically no longer theirs, but they retain control over how it's distributed. So they still get to support the causes they care about, while maximizing the tax benefits in the year that makes the most financial sense. If your usual charitable giving isn't enough to tip the scale for itemized deductions, donation bunching might be a great strategy to explore. Officeheads provides this and other tax advice to its clients. Jim is here to help with any questions you might have. Thanks for watching, and keep doing good out there.